Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your first market recap video of 2024, and a very interesting day to start the new year. The major theme that I've got up here is it's a big rotation day. Dogs of the Dow. We'll talk a lot about that, but in general, today was a very big rotation day. Some of the under-owned areas of the markets, what I'm referring to is there is an ETF, by the way, for low volatility areas of the market. It's called SPLV. We'll look at that chart and shortly in a second too. But those were the areas that have really been underperforming and probably under-owned. If you look at last year, what didn't do well? Consumer staples, healthcare stocks, utilities, and probably a few others that I could name too. But those are areas that just didn't do well. Of course, solar companies too. But so it's tough to say that the first trading day of the month is going to be like, oh, that's the themes that are going to be going forward, because a lot of that is a very seasonal factor. And there is a trade out there. It's called the Dogs of the Dow, where generally the worst components in the Dow tend to outperform in the beginning of the year. So before I get to any of that, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So you have some of that going on. And then you also have a lot of areas that were just, a bit overbought and, saw some profit taking the beginning of this year. And if you look at the areas that outperformed or that underperformed, we'll start with the underperformers today, right? So first of all, it's the Qs. And, we can go through these charts now, but here's S&P. We can look at SPY. So first of all, we've got a new value area, and we have a webinar tomorrow that we're going to go into, all of the sectors and, some observations that you're going to find within different sectors. I will go through, a couple of them in today's end of day video, but SPY is starting the month inside value. That just means for now that we're kind of range bound, and unless we break higher for 77.40, which could happen sometimes in the month, or we could spend some time here inside value. But for now, the valuers tell you what we're presently doing. It's not a prediction tool, volume at price, but it's telling you that right now the overall market is not ready to do that, and we are above the 20-day moving average. Now, of course, what the main thing is here too, for the on the weekly chart, we've got a new value area for 2024. What is that value area based on? Right, this is the box here. Right, that is based on all of the activity from last year, and you can see this volume profile here. Right, so it is much better when you kind of use a bit of an average of that data versus, I see people all the time, oh, look at, there's a volume shelf in the market profile and so forth. That might work by chance, but overall, what we basically just want to know is where there's support and where there's resistance, with looking at, approximately one standard deviation of all that activity. So we are decently above value. Now we could come back at some point and check back, and if we do, 440.61 will be the level to watch. So this isn't that useful now, other than just the fact that knowing that we're in a price discovery right now. So we could see some type of a check back, but for now, I think that we want to understand what it tells us with the volume profile and what the MarketWebs are telling us on the weekly chart, but really look for your signals there on the daily chart, and even sooner on the 1 hour chart, which we did break below. Right, so we're below value. We're kind of moved back to this virgin point of control, which was where all the activity happened a couple periods ago. 2 weeks ago, right? We had a lot of volume in there. So 474.10 is going to be something to watch. We could just do this really quickly with the Qs. Now the Qs underperformed. Of course, we know that they outperformed last year, right? And you can see for the Qs, this is going to be different looking than the S&P, right? The volume, the MarketWebs, basically 400 is something that we're going to want to see price stay above, right? So again, you can make some so what we want out of our trading a lot of times is just to make easy decisions. Hey, I want to be long the breakout in the Qs, providing, that they're, and that means that they're providing strength. But if they can't hold 448, let them kind of go into digestion mode for a bit. And what's interesting, now that we're in 2024, right? No one has a crystal ball, right? No one knows if that's the case, if the Qs are going to rest, right? Because number one, you can't really make too many confirmations or too many conclusions off of just one trading day. Right? One day is not a trend. But we've got levels to watch. And, if we do break further to the downside and we break below 448, that means that the Qs are in some type of digestion zone, or they could even show some more weakness. And then let them do their thing, right? And then maybe look for some other areas that are going to outperform while the Qs do that. Do we need to do that at this point? No, we don't. But that's where we have our level, 400 spot 48, right? And again, this is the beginning of a weekly bar, right? Today's Tuesday, so we've got Wednesday, Thursday, and Friday to go, right? And notice that we're also checking back to this 20-period moving average as well, right? So if we hold here, that's fine. But it doesn't mean that even if we hold here, right, that the Qs are going to immediately outperform. You could also look at that 412 level, 23. But my opinion is let them do their thing a little bit. This group got very overbought, and probably is in need of some digestion for a little bit. Shake all the that froth and some of the weekends out of the market, right? Let them rotate into some other areas, and let the Qs act like that they could be a buying opportunity again, right? But not yet. So anyway, so while this happens, right, what we want to look for is relative strength. And I just want to go over the small caps too. They did not hold above the value area. So 201.27 is going to be the level to watch there in the Qs. This is what the Qs look like just to give you a sense of what it looks like on the weekly chart, right? They did manage to get above the new value area before the year, and that level of support is going to be 188.51, right? Now, one more to look at is the Dow, because the Dow had some nice relative strength. Notice that this is at all-time highs right now, right? And so it will need to overcome this last barrier here. Sorry to zoom in here a little bit, but I think you can see what that level is, 377.82. So we don't know if, again, and this has been on a nice run too. So it's tough to kind of to be greedy here and say, geez, let this get over 377.82. Maybe that will happen at some point. But, here was the performance, by the way, of the Dow. And, what's nice about this, when you look at the Dow stocks, again, there's only 30 of them, and they probably look kind of tiny on your screen here. But you've got a mix of some of those underperformers from last year. Merck, which was very quiet last year, was up 3.9%. Amgen was up 3.25%. Verizon, which again, I believe that to be kind of a dog of the Dow, was up 3%. You haven't really heard too many people talk about Verizon, right? Also Walgreens, J&J, CocaCola, Procter & Gamble, JP Morgan, which broke out to new highs today. So that's the story there. And then I mentioned SPLV. So again, you've got some interesting outperformers, even though Intel was down 4.8%. Semis were down. Semis and software were both down pretty decently. What I wanted to talk about next, and then I'll go through some sectors, but is this a bad sign when SPLV, which is the low volatility ETF, you may be asking yourself, what the hell is this thing, right? And what's in it? Well, I always kind of try to show Bloomberg so that you could see for yourself rather than me tell you. But it's a lot of low, as you would think, what are low volatility equities? It's things like McDonald's, Coca-Cola, Pepsi, Kraft Heinz, Berkshire Hathaway, things that don't move as fast, right? So electric, which is kind of utilities, food, which is kind of consumer staples, insurance companies speak for themselves, retail, pharma, right? All of these things are a bit slower moving, lower volatility equities. Now, if this group decides to outperform for a little bit, is that a horrible thing for the market? right? Because I've heard this before. People like, oh, geez, don't let those consumer staples outperform. That's going to be a no-no. Or don't, don't let the utilities outperform. That's going to be bad. Well, it might be bad. The one thing that it might be bad for is high beta equities and things like, the Magnificent Seven or semis, right? So it might be bad for those, software names too. But will it be bad for the overall market? I don't think so, because, and the reason why, I can interject some personal experience. I remember I had, when I was at Merrill Lynch, Bank of America Merrill Lynch, as it changed, but I had like, a higher up ask me, the market was up one day, this is going back to like 2011, 2012, when these ETFs were made. And the market was up quite a bit. And they said, wow, it must be a really strong day. And I was like, well, it's a strong day for some of your, healthcare stocks and utilities. And, he kind of like scratched his head because he hadn't been looking at the market all day long. But we had a period in 2011 and 2012 where the market did just that. Low volatility equities outperformed, and the market continued to go up, right? The market didn't fall apart. The market didn't go down. The market just continued to go up. It was just different groups that were leading, right? And the same thing happened in 2015 and 2016. Now, again, we did go sideways there a little bit, but at the end of the day, the market continued to go higher here. But yeah, this is something that I just remember from personal experience, that we did go through a time period where those areas outperformed and the market managed to make it through just fine. Now, not everything is always going to be the case, but so why do I bring this up to you? Because I think there's a lot of retail traders that get stuck in the same stocks all the time, and they have a really tough time if they're liquid names don't, and we could call them Magnificent Seven, but obviously we know that there was a lot more names that performed pretty well, the semiconductors, the software names, the, 5 other groups. Industrials did very well last year, right? But I would encourage you to have an open mind. And again, I'm not giving advice or not telling anybody what to do, but if you could find some stocks that you like in different, and outside of the software and semis group, you're going to do a lot better in this market if we get a couple days or a couple weeks or even a couple months of some of these areas that have really lagged. Because again, I don't think that there's anything wrong, and we'll go through some names that I certainly have picked out and thought that was interesting. But let's start with the healthcare stocks, because this was something that so notice that I'm going to start with the weekly chart, right? Because I sent out a chart over the weekend talking about, hey, maybe it's healthcare's year to lead a little bit, right? Because look at the last 2 years in healthcare stocks, right? And I talk about this. I looked at this chart a few months ago, and I said, well, I don't want anything to do with healthcare stocks right this second, because I'm not trying to time the bottom, right? I'm looking for something significant to happen, right? Because sometimes you time the bottom in something, and then a month later, that's all that it does. I'm looking for something like this to happen, right? So, basically what happened a couple of years ago, where you had a nice like higher, and healthcare stocks have led. You could go back and you could look at the chart. XLV, I remember for a number of years the healthcare stocks doing very well, and then we'll talk about biotech. But so this is a nice rest right now, right, for the last 2 years. So maybe this is looking to resume its trend. What else can you say about this picture? Well, look at how thin the value area is. It's thinner than last year's, and that was thinner than the year before. So sometimes when these value areas get very thin like this, right, that means that they're kind of like bottled up, right? You could see that the moving averages are all coiled around one another, so maybe we can get some outperformance here in healthcare, right? Now, the only thing, and again, like I said, one day is not a trend, right? We did take out a pretty big level there. That's a virgin point of control, right? So that's overhead supply, and that's kind of why we just stopped right there. And I did get long XLV today, but my thought was, and I got long in the beginning of the day, and this is not a big big move from what it did there. So even though that's not a big move, I still took a target, because that's what my indicators telling me to do, and then we'll see what happens around this level. So really watch the close, right around this 138.80 90 level is going to give you a clue about what's going to happen in healthcare to come. So I like this, and again, you don't have to play the ETF like I did today. I'm going to go over a couple names here, and then we'll talk more, even though this is a biotech stock. But look at Amgen. Amgen had a huge day today. Right. And again, if you look at these charts in some of these things, they're not that well. This is a little bit extended at this point, but nice breakout to new highs. But if you go through the list, look at ABBV. Now, ABBV looks pretty similar to that XLV ETF, but nothing wrong with playing this name either. Right. So you've got some leadership here. Right. And what about Lilly? Right. Well, Lilly is kind of tucked inside its value area for the year. Right, but it may be beginning to kind of restart that move higher. Notice what it did there, right? It closed right at its top of value, right? It really didn't do much the last couple months. So you've got this kind of pattern maybe you could draw something like this too, if you like. Sometimes when it start leaning to the top, I just draw the top line, but some people like to do that too. So that's what you've got going on there. And with Eli Lilly, and I think that's a must watch. All right, so that's the one group I mentioned. I would go over biotech too. Now, biotech, you might have some good risk to reward here, right? This was for a while last year, was one of your worst performing areas in the market, and then made a really nice comeback, right towards the end of the year. Now, if we look at where it's at now, it did manage to, and again, this is a developing candle, so this could cancel out by the end of the week because we've got 3 more days before this candle is complete. But right now, XBI is doing something that it didn't do all year long, which is get above its value area. So again, it's a try, it's an attempt, right? And I did go long this, and I'll take it off if it doesn't stay above 89, right? So that's what I'm watching. And then once we kind of look at this weekly chart, right, of course, what we want to see is the daily chart. And notice kind of the same thing. It's staying above value for now, right? And that level's 88.62. All right. So to me, like, this is pretty exciting to see this. I'm personally like happy that there's another group because, at the end of the day, I don't know if you enjoyed trading like the last week and a half of, some of the tech and software names, but they really didn't do much. And it got kind of boring with a lot of names. I was talking about over the weekend, like Crowdstrike. Crowdstrike hadn't done anything, right? So this might shake things up a little bit, right? And again, this doesn't mean I'm not going to like the company Crowdstrike. It just means for now, the stock might be in some consolidation. But look at it. Right, this thing went side. You can't make a lot of money when this happens, right? Unless you're selling premium. And that's the story in many names. This ESTC looked like it was going to break out a couple times or take a next leg higher. This thing didn't go anywhere for a number of weeks too. Now, this doesn't look particularly good, that break, but it's much better when you find new group. In my opinion, like these group, the move just got too far. And these names just didn't want to go further after they already, did a big move. So Zscaler is another one too, just to kind of give you some perspective. But I don't want to sit in these things for another 3 weeks and nothing happens, right? That, you can't make money like that, with no movement. So let them reset a little bit and come down a little bit. Right, Datadog is another one too. Now, so it's still important to watch these things, but let them shake out a bit, right? And then they will probably set up again, right? That's sometimes a lot of times how the market works. I just wanted to go through a couple other areas with you too. A lot of people were talking about Celsius. This is a name that I traded last week. Unfortunately, I got out of it last week, so I missed this move. But why do you think this name went up today? 8%, a growth name up 8%. Well, it could be because look at the sector that it's in, right? I know people think, oh, it's growth, right? Well, true. Yes, this particular name, but look at what Pepsi did today. Look at what Coca-Cola did today, right? So it's the group. I think Coca-Cola, that's a big move for Coca-Cola, up 1.5%, right? So don't discount like what group it's in and just say, oh well, Celsius is a growth name that did fine today. Look at the peers and realize that yes, Celsius is kind of supercharged, right? And that's a good thing. And I do think it has a nice growth story to it. But Mondelez, Mondelez was up 2%. That name doesn't move 2% normally. So you can find some setups. And if you have to, cover up the symbol, right? Because isn't Mondelez going up 2% better than CrowdStrike going up, 1/10 of a percentage point for every day for 2 weeks in a row? So you can make money on these things. The insurance group, I think, is coming back into play again after taking a little bit of a break. Names like PGR, right? Progressive, Allstate, again, up 2.7%. So again, I'm really beating a dead horse here, but look at CrowdStrike. So the reason why I'm going through this exercise is because I know how traders get hooked in this stuff. So forget about today's down 3.3% move, but look at the moves in this thing, right? It just really got after it made a huge move. This is what happens. Names digest, they see profit taking, and money gets allocated at different places. So maybe I'm still in CrowdStrike. I didn't sell out of it. I've got a small position left. I'll be happy if this name recovers, but do I want it to recover and then just do nothing again? No. I want it to have something to it. Abercrombie had a nice day today. Nice bullish engulfing for this one. So the trend continues at Abercrombie. I mentioned JP Morgan made a new high, right? So some of the financial names, are doing pretty well. There you go. I mean, so again, tough to say, like tough to really hate the market that much when JP Morgan, breaks out to a new high for the day, right? In my opinion, again, just be open to, different groups. UNH also in the healthcare spot. Look at what UNH did today, up 2.4%, monster move. And IHF is the ETF in this space, which is the managed care, that's breaking out. It looks like it's breaking out of the range. All right. And so yeah, I'll end it there. I've got other names to go through. I got long a little bit of DuPont today too. Didn't have that big of a move, but this has been a kind of an outperformer in the group. We were looking at some other names like other names that really underperformed last year, like an NTR and a CF. Not bad, but I'll stick with the one that's been doing the best out of the group, which is DuPont. All right, guys, that is it for today's recap. Let me know if there's any questions. We're also make sure that you're signed up. From time to time, I mention it's something that we're doing at Tribeca Trade Group. Well, number one, we've got a webinar tomorrow, and if you want to be involved in that webinar and want to see us go through many more charts in detail, make sure that you are signed up to be a member of Tribeca Trade Group. You can go to TribecaTradeGroup.com. Also, you could go to our Substack page, because I will be rolling out something new for like super part-time traders. So make sure that you're signed up. That's free right now, but you'll see the offer once I start rolling that out. All right, guys, have a great night. See you tomorrow.